Okay, hey everyone, Mark here, Mark B Markets. Thanks for joining me for another Greenbridge market analysis. I'm sorry I'm running behind again. It's just these things are pain to set up. Anyway, thank you for your patience. Okay, so if you're new to my stream, welcome. What we're going to do here today again is I'm going to run through my Bitcoin analysis first. We're going to look at the price action, the price structure, and this and that. Once I complete that, I'm going to go straight to the chat and start answering your questions. So if you have a symbol like a stock or an altcoin that you'd like to see, please share it in the chat now. I see quite a few questions in there, so that's great. Thank you for sharing your questions. Also, if you'd like to see an altcoin, please make sure to put USD or USDT after the coin. Otherwise, I'll look at the wrong symbol for 3 hours, and we know how that goes. Okay, so let's get started here. Now, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, let me just adjust my mic here. Hold on a second. Okay, that should be better. All right, so let's say hi to a few people. We got X, okay, Dan and Mr. Banian, good to see you. Elizabeth, Eligius, Dave, I think, right? Sorry, sometimes I forget names. Bill, good to see you all. Travel, all right. Wedge, cool. All the regulars. So let's first things first, let's get into this Bitcoin situation. Now, Travel put an interesting link in our free chat over on the website about some, I guess, testifying. Some CEO was testifying about Bitcoin yesterday, and he asked me if, what I thought about that. I don't pay any attention to news at all. So I only look at price action, I look at price structures, and I look at levels, because that's a reflection of the news. I don't need to know the news. The reason is I don't believe that markets move on logic. So I don't want to become opinionated. I just go by what the price tells me. I think what the price tells me to think. All right, so, but thanks for sharing that article. So here's the Bitcoin situation. As you can see, the broader trend is still bullish, okay? Because we do have the series of higher lows that led to the higher high at 69K. Now, since then, though, we do have a series of lower highs and lower lows. That is not the broader bullish trend. That's a corrective move within the broader bullish trend, right? I go over this all the time. So we are at attractive levels for longs as far as swing trades go. Day trades are another story, but I'm not talking about day trades here. I'm talking about swing trades, and I'm talking about longer term investing ideas. So here's the thing. We have, look at these locations, okay? The mid 40,000s, what is this, like 45,000? What is that low there? No, this is still 50,000, right? This low over here is 50,000. What's this low? Let me just look at the count. I'm sorry, the low is 47, right? 47,000. And the most recent low is what, 42, whatever, right? This long pin bar situation that we have here at the bottom there. So that's our support area. Now, that's an area that's what I would like to call wholesale prices. I wrote an article on TradingView about that, my recent article. These are areas, this is definitely a good area for investing, okay? Buying inventory. Many of you have heard my inventory speech many times, okay? So if you don't know what that is, I'm not going to explain it all now. But the thing is, these are good prices for your smaller batches, right? So if you have $10,000 to invest, this is a good time to maybe purchase $100 worth, or maybe you want to skew larger, okay? Maybe $200 worth if your normal batch is $100. But the thing is, you don't want to be buying a batch every day. You have your set times each month. Could be the 1st of the month, could be the 15th of the month. Maybe you have 2 days. Maybe it's the 1st and the 15th of the month where you make your purchases. But they have to be set in a schedule. You can't just randomly, I just feel like buying today. You can't do that, okay? So, because the idea is to average your inventory around an average price. So anyway, these are good prices for that. Now, that doesn't mean that we're going to bounce here. It just means these are lower prices. We're not coming off the highs here. We're going into the lows. So your risk of retrace is to the bullish side, not the bearish side, right? At the highs, the risk of retrace is to the bearish side, and why I tell people skew smaller at the highs. So we're near supports now. So it's usually a good idea to buy around supports. Again, with inventory, you're not using stops to manage your risk. You're using your small size to protect you if this thing continues to break. Now, at this moment, the structure that I'm seeing here, right, the lower highs and lower lows, yes, we're at supportive levels, but there's nothing here that says it wants to reverse. All right, we have a lower high that was put in right here, right, this lower high right there. Lower highs often lead to lower lows. I talked about the sell signal in the chat room the other day. People are asking about, buying this, buying that. I said, there's a sell signal there, okay? And the sell signal went off, I think the night before and whatever, and here we are lower. So in theory, this structure should lead to a lower low. Now, in the process, while it's trying to do that, this entire area could print a higher low or a double bottom or a failed low. Those are the reversal patterns I'm looking for, okay? Now, the candlesticks are going to have to cooperate with that. This candlestick right now is certainly not cooperative with anything long. This is why, by the way, I tell people the initial move, which came off that 42K low, the initial move is the riskiest move to get into because you don't know if the structure, there's no evidence or there's no proof that the structure has changed at that point, okay? Everyone likes to jump in on the initial move because they think it's the bottom. Oh, okay, it's the bottom. I bought the pullback and now it's going to continue as usual. No. All right. If it's in a bearish structure, then it's going to most likely, there's a good chance that it's going to test the low again, possibly go slightly lower. So the correct mindset in this area is to be thinking bullish. If you're thinking bigger picture, swing trade or position trade. If you're thinking short, then day trade. All right, and that's because your risk is smaller there. Because again, if you're shorting this, you're shorting into supports. So the risk, the magnitude of risk is extremely high. For a day trade, you can control that, or you should know how to control that very well. That's the whole point of being able to take advantage of stuff on smaller time frames. All right, so anyway, that's my point with Bitcoin. So there's nothing to do at this moment as far as swing trades go. And like I said, position trades, you can put a position on at any price. It's really not about timing. It's about sizing. And these are generally good prices. But as of now, price can go lower because there's nothing that says it's reversing. We're just in an attractive area. It's possible that Bitcoin can break these supports. And if it breaks the supports, then you're probably going to see some dramatic and ugly price action. You're also going to see a lot of talk, a lot of voices, a lot of big mouths making ridiculous projections, saying it's going to 20K and all that other stuff. Stop listening to that stuff, okay? No one knows anything. It's very easy to pull up a chart and put a projection on a chart, right? You measure a level and say, oh, look, my projection tool shows 20K. Anyone can do that. There's no skill required to do that. So, the problem with that is it plants the seed of an opinion or an expectation that's completely irrelevant to the market because markets change, okay? They're highly random. That's why 6 months from now, no one knows where Bitcoin is going to be. On shorter time frames, if you're looking a week out or a few days out, it's much more practical to anticipate where Bitcoin can be based on the recent price structure. But the further out you go, the more random, all right, in that sense, because some piece of news can come out, in a month, and this thing can be higher by 10K for whatever reason. I mean, look at the testimony news that Travel put in the chat, right? No one knew this a month ago. Maybe insiders knew. Maybe they knew that this guy was going to come out and testify, and maybe that's why, Bitcoin's been weak for a while, okay? But a month and a half ago, 2 months ago, here comes the rant, when everyone was, oh, Bitcoin's going to 100,000. I watched the one clown that I always bring up. I'm not going to say his name, but the guy says, oh, yeah, there's a 70% chance that Bitcoin's going to be at 85,000 by December, blah, blah, blah. Yeah, I don't see 85,000. What happened to 70% chance? Everyone's entitled to their opinion, but the problem with something like that is when you make such a a plausible argument, right? And he's showing all these details about how he came up with the idea and blah, 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 blah. It looks plausible, and someone who has no idea what they're doing are going to take risks that they shouldn't be taking. And I can understand if you're buying a pair of shoes or if you're buying a product or service of some kind, you buy it, you use it, and that's it, right? Your money is not continuously exposed. But here in Bitcoin or any financial market, it is exposed. So you may have gone in with 1,000 and that 1,000 will vanish. And then you put in another 1,000 and then that will vanish, right? That's the problem with these fake gurus. Anyway, all right, so that's Bitcoin. Let me get to your questions now, because if I keep ranting, I'll talk about this the whole 3 hours and you'll be like, man, when's he going to get to my question? All right, so that's my situation. That's my assessment for Bitcoin. Also, one more thing I want to add to that, because people have been asking me about the Elliott wave. This most likely is the broad consolidation, the wave 4 that I've talked about for a very long time. And I'm going to just show you really quick a great example. I've showed this before. Many of you that follow me know this. This is gold, okay? And see this price action? This goes back over a year. You see that? That's a wave 4, a broad wave 4, a persistent. It's gone on for what, 14, 15 months of false starts, false breakouts, fake outs, no trend. Okay, that is what a wave 4 typically looks like. It's not just a simple 3 waves. This is a compound corrective wave on gold. So I suspect Bitcoin will look something like this. All right, unless it proves otherwise. But right now, I suspect something like this, which means, we want to find a range low, and we want to, the range high is most likely in, and we want to shape our expectations around those levels. All right, so meaning when you're near range lows, like we're sort of getting near one, 40K is most likely a range low, you want to be thinking long at range lows, not short. Okay? Of course, it could always break, but the more effective thing to do is to think long. All right, so let's get into the questions here. So X, I managed to sell BTC at 51.5. Now to get back in, would you advise to step in front with orders? All right, so here's the question. Here's the thing. Is it inventory or are you talking swing trade? Because if you're talking swing trade, there's no stepping in. All right, swing trades follow a very specific set of rules. If the rules aren't met, there's no trade. So putting limit orders in at those prices is not effective for swing trades. And the reason is markets are very random, right? If it was that easy, then all we'd have to do is place limit orders and then just, oh yeah, it's that easy. No, it's not that easy, because Bitcoin can move 10,000 points in an hour if it wants to, right? So if you put your limit order and you put a 4,000 point stop, it'll just it'll tap you in and tap you right out, right? And then you never even had a chance. Meanwhile, if you had waited for the rules to align, that stop could have been, that stop wouldn't have happened. Okay? So you have to keep that in mind. Now, inventory is a different story because you're not using stops. So, if you want to play that game, I wouldn't put orders in unless if you want to split up a batch. Let's say your intention is to invest $5,000 over the long run, and you're going to do it in $500 batches or $500 increments, and then you want to split up that batch, that $500. Maybe you want to split that up 2 ways, right? $250 each. Then you could put 250 orders for $250 at multiple levels, and you're basically accumulating your $500 batch around that area, right? Does that make sense? So that's how you can play that game if you want to play that game. But as far as swing trades, rules have to be met. I trade rules. I don't trade feelings or, even levels are highly random. You can't just step in front of a level. I've learned that lesson many, many times, and it's cost me a lot of money. Okay, Mr. Banian, is it okay? Good, cool. Thanks for stopping by. When the recession starts, where would you put your money? That's a good question. In the bank, because there's always going to be higher quality investment grade type of vehicles, right? Stocks like Apple and stuff like that, stocks that pay dividends. So that's what I'd be looking for. But if there's a recession, first of all, I don't follow any talk. If people are talking of recession, I'm very leery. Okay, I don't pay any attention to any expert opinions because it's all nonsense. They were calling at the March bottom, all right, March 2020 bottom. There was the economy, blah blah blah, and they pumped so much money into this system that no one ever expected these things, the S&P and the NASDAQ and these stocks to move the way they have. So I pay no attention. But as far as recession goes, we'll see, because I don't have any opinions. I don't have any any absolute predictions of the future. Okay, what I like to see is good stocks get beat up and then build positions, or build some inventory in good stocks. Because forget these garbage coins and all this. These are not investment grade vehicles. These are not investment grade instruments, right? So probably most of these altcoins are probably just going to flounder and just do nothing or go to zero or stuff like that. When you have 8,000 altcoins in the world, there's no way that more than a few percent of them are going to be successful, right, in the future. So I wouldn't even bother with those. All right. So anyway, I hope that answers your question there. Now, Elizabeth, Ethereum, sure, let's take a look. So she asks, please take the leap at 39.50, 4K. Okay, so let's go to Ethereum. Now, Ethereum has been in a better structure, right? It's been showing a better structure than Bitcoin, right? We talked about that in my other stream on Monday. Here, let me go. I can never find the right chart. Where's my stupid chart? Okay, is this it? Yeah, there it is. Okay, so, but here's the thing. Do you recall what I said about Ethereum on Monday? I said it was acting relatively strong, which was a good thing. But if Bitcoin fails, right? I said that. If Bitcoin fails, it doesn't matter how good this thing looks, it will fail too. And here we go. Now, a lot of people, they don't know any better, and they, oh, look, Ethereum. I saw a title on YouTube. Ethereum is going to do this. It was like a brand new video. I'm like, is this guy serious? This guy's one of the biggest phonies I've ever seen, right? Because he always calls things, he makes these extreme titles, and it's always like, do the opposite of the title, because you'll probably make money that way. Anyway, he was calling for Ethereum's going to do blah, 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 and look, big red candle, okay? Thanks a lot, guy. Thanks a lot, dude, for your great video. Anyway, so this is a result of Bitcoin. If Bitcoin continues lower, and it's poised to do that at this moment, this thing is probably going to break supports, okay? At least this support level here. Is that the 39.50 level? It's 39 even area, right? And it's tested, as you can see, it's tested below that level and came back up hard, right? Just like Bitcoin tested the 42K, and we saw that dramatic move. So here's the thing. As far as taking the leap, if it's for an investment, for inventory, these are attractive levels. But if Bitcoin breaks those supports, this thing's going to break, especially since you have a lower high established in here now, okay? If this consolidation, if it can hold, great. You have possible swing trade opportunity around this level here, right? Around that 39.50 area, 39 even. But at this moment, there's no reason to buy. Now, let me give you an example of something here. You could have argued the other day, right? You could have said this is a buy signal, and it is a buy signal, right? You had the inside bar, took out the high of the inside bar, right? And it was off of the range low. You could have made that argument, and that trade was worth something, okay? It was worth something in this area here, but now it's red, okay? It's below where you have bought it, getting near the stop. That's what you have to deal with in this situation, right? And the thing is, a lot of people aren't going to use stops. They're just going to hold on to it because they're going to say, well, it's Ethereum. It'll come back. It might not. So I wouldn't trust that thing. I would not hold on to it. As far as swing trade goes, no way. So here's the thing. The broader trend hasn't changed, so it makes sense to give it a try at the range low if you get another buy signal in this area. There's nothing there right now. But the same goes for Bitcoin, right? If you're interested in the swing trade. If you're interested in inventory, then, like I said before, you can start taking your small batches here, you know, especially if it starts testing this low area, this extreme low area, if price starts testing that area, those would be good prices, okay? You have an old resistance actually overlapping this area here. So it makes sense that there's trying to be support. What you have to watch out for, and it's why it's so important that you have your trade defined in advance, is if it's a swing trade, you have to take the loss. Because if this thing breaks the support, this thing can test much lower prices that are unexpected. You know, it's hard to believe that Ethereum can go this low, which is what? 2790 or whatever, 2800. It's hard to believe that it'll go there, but it can. That's a support level, okay? So you don't want to get caught from like the 4,000 area and watch it get, you know, watch it give back 30 or 40%, right? You don't want to get caught in that. So that's why if it's a swing trade, it's very important to define what type of trade it is. You take the loss and you prevent yourself from getting caught in that situation and being at the mercy of the market. Does that make sense? Okay, so I hope that answers your question. So as far as swing trades, there's nothing to do there right now. All right, Mr. Banian, is there anything besides TradingView where I can use spreads to look for correlation? I don't have okay. As far as free, Mr. Banian, I don't know of any websites. There's a site called I think it's called stockcharts.com, and I believe they have some free stuff you can play with. Maybe you can do correlations or spreads on stockcharts.com for free. I don't know. But for free is a problem when you want luxuries, when you want things like that. So, you know, TradingView is a great platform. You can do so much with it. I mean, it's definitely worth the subscription, but if you don't want to pay the subscription, maybe stockcharts.com. But I wouldn't know of any other platform that's free that would let you do something like that. Okay, so thank you for asking. I mean, maybe you should Google like the free platforms. I think FinViz is a free platform, if I'm not mistaken. I'm not sure. Maybe you could do it on there, but I'm not familiar with the platform. So don't quote me on that. All right. So where do you see the dollar in 2022? All right. Well, I don't have any opinions, but let's take a look at the chart, though. All right. Because here's the thing. I've been saying this since August. Dollar is strong. Dollar is strong. I was saying it. Go back. You can watch my streams. Go all the way back. Okay. And I was saying it, dollar is strong. Now, look at this chart on the dollar index. Higher lows, higher highs. Let's take a look at a weekly chart. All right, so this thing broke this resistance up in this area here. What was that? The 92 area, right? I'm sorry, 93. And it's been pretty much like an altcoin ever since, right? It's pretty much vertical. It's having some hesitation here, but this is a pretty significant structure right here. I would be anticipating higher lows and higher highs until it proves otherwise. And to prove otherwise, it needs to start breaking supports. We're nowhere near supports right now. So this thing can spend a lot of time fooling around. So to answer your question, where do I think it will be in 2022? Higher, as long as this structure stays intact. If this structure changes, we start taking out like the 92 support, we start doing stuff like that, then we're probably going lower. But if there are pricing rising rates in, which I suspected for a long time, the dollar's only going to go higher. And you want to get clues from that, take a look at the bond market. Always take a look at the bond market, right? No one wants to talk about the bond market. Now here's the 10-year note. And today it's showing a green candle and the dollar has a green candle. That's strange. They're supposed to be inverse to each other. But, you know, markets are irrational that way. If this trend continues, which this trend is bearish. I mean, look at this. If this continues, right, we have a lower high established here, right up here. You can see that. It breaks this support, which it keeps flirting with. If it breaks that support, that will be a lower low. And that's going to signal that the dollar is going higher, okay, because lower bond prices means rising rates, which means bullish for the dollar. Okay, so keep an eye on that. That's a very significant factor. The bonds are very important when it comes to like economic. You're trying to figure things out like economy-wise, recession-wise, blah, 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 blah. Watch the bond market because the bond market says a lot about how things are going to change. If interest rates rise, that eats into the profit margins of a lot of companies. And that's why I keep telling people, watch Q2 or Q3 of next year. If companies start saying things like, well, we made some money, but we're going to lower our expectations for the future because, interest rates are eating into blah, blah, blah. They may not say those words exactly, but that's when you see money coming out of the stock market, okay, because of the rising rates. So it takes some time, but you want to keep an eye on that stuff because that's important. It also, another thing you have to keep in mind is who trades bonds and who trades currencies, like seriously, funds and banks and large institutional players, right? Governments, that's who move these things around. They know stuff. They make the laws, they make the inside information half the time, especially our government. So, something to keep in mind there. All right, so I hope that answers your question. Thanks for asking about the dollar. No one asks about it. Eligius, all right, no problem. Okay, okay, cool. I gave you a couple of rants so far. I always have more. So Solana, let's take a look. I know USD. Andrew sent out a position trade. I know picking up some inventory on this thing. Now look, this chart in general, right? This is a daily chart. Is generally a good-looking chart. Okay, you are at a support right now. So generally you have higher lows and higher highs, right? Recent price action is consolidating, as you can see. Now, do you see, here's a lesson here. Do you see why I'm always yelling at people for buying highs? Do you see why? I mean, look at this, right? If you bought into this high thinking, oh, I'm going to be a millionaire now, you're not a millionaire. All right, you see that? Because this is what's coming next. Now, you're near lows now. So, I mean, as far as swing trades go, these are the levels to be thinking about them at least. All right, maybe you don't have to take a swing trade, but this is the place to be thinking about one. At the moment, there is no cooperative price action, right? Let's take a look here. And price action can get tricky. Look at these candles. So, just going back a couple of days here, bullish pin bar, broke the high of the pin bar, bullish inside bar, right? It's very confusing here. It's trying to hold that support. But today's candle says, no, I'm not going to hold the support anymore. I'm probably going to break it because that's a pretty solid candle. Of course, it's following Bitcoin. We shouldn't be surprised too much by that, right? These things still follow the leader. Some of them are breaking away for a little while, but over time, I think it will come back, right? It's things get out of hand. You have to understand what moves these things. These are not stocks, okay? A stock can have a piece of news that's specific to their industry or their company or whatever, and the stock can move on that because, whatever. It means something for the future of that stock. These junk coins, okay, they move on hype. They move on marketing. So some marketing company comes out and puts out blah, 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 or some loudmouth guy on YouTube because he's getting paid $25,000 to push a coin, right? And he has a huge following because that's how much they get. You want to get rich with altcoins? There's two ways you can get rich. Number one, come up with your own altcoin, hire a marketing company, and when the herd comes for your coin, you sell it to them, right? You'll be rich. That's number one. Number two, right? The second way is become a fake guru. It's very easy to do. You can watch a few of my videos, learn some words because you don't need any skills or any experience, right? Become a fake guru, get a large following, and then push coins on people for $25,000 per sponsorship. You'll be rich very quickly. Those are the two ways to get rich with altcoins. All right, anyway. So yeah, as far as this goes, you're out of support. If Bitcoin breaks, this thing will break too, most likely. And the next support on this thing is going to be around here somewhere, okay, around there, which is what, 137.61 area. So that's, I mean, if you're in this thing right now, hopefully you're not in from much higher prices. Let me see. What do you say about that on here? I have a position which has gone negative. Okay. So the question is, I mean, you don't have to tell me what price you're in from, but if you're in from a high price, you're taking a lot of risk. Okay. Now, you are at a support. So if you want to give it a chance, you can give it a chance. There's a few things you can do here. Now, I can't give you investment advice, But a couple of considerations. Perhaps you can lighten up the position. In case this thing breaks the support, you'll lose less. But if it holds the support, you're still in some of it and you recover something back, and perhaps you can add back what you got out of, right? Instead of getting out of the whole thing. That's one consideration. Another consideration is you get out of the whole thing and take the loss if it breaks this level, right? The level would be what is this low here? 169. So you probably have to give it a little room, maybe to like 165 or something. And if it starts pushing that, then at some point you have to take that loss if it keeps going. Now, another clue would be Bitcoin, right? Watch Bitcoin. If Bitcoin starts to reverse or holds its support, then this thing most likely will follow. Okay, so and another thing to keep in mind is if it does try to reverse again, tries to bounce off this low, and you have an opportunity to lighten up on some, maybe you should lighten up if the position is uncomfortable, right? If it gives you a chance to reduce some at a smaller loss or maybe even a smaller profit. All right, so I hope that answers your question about Solana. That's why, again, I was so against these things. If you look at this here, right, this is the I guess the total market cap. It looks just like Bitcoin, right? I mean, you see this, and this thing, as long as it keeps making lower highs and lower lows, money's coming out of the entire space. So most of these things are going to do the same thing. All right, thanks for asking. All right, so let me catch up here on the chat. Okay, so Wedge. Okay, from Smyrna Beach. Yeah, I like beaches. Not the ones in New Jersey though, but I like beaches. All right, ones in Florida. I love beaches there. All right, hey Kim, thanks for stopping by. Good to see you, Schwartz. Schwartz, my international man of mystery. All right, what are you up to today, Schwartz? What country are you joining us from today? All right, doing his international man of mystery things. We don't even know what they are, but he's here. Okay, cool. Thanks for stopping by, Schwartz. Oh, all right, so I guess it says medical next to his name, so maybe he's like a doctor or something. Are you like a doctor? All right, hey, Winter Fresh, Cake. Let's take a look. Cake. Man, is Schwartz like a doctor? I'm going to have to smarten up here. I'm talking to like doctors and stuff. All right, so let's see what's going on here. First thing is, well, this chart, we just came off of the Solana chart, right? Look at this chart in comparison. Let's just take a look at a weekly chart. This thing, talk about hype. Talk about being hyped and now, being sent to the garbage zone. Look at this thing. This is not a good looking chart, right? There's nothing bullish about this structure. There's a lower high in place here. It's made the lower low. The higher low never stuck. This is what you have to watch out for, like coins like Solana and all of them. You see, let me just point something out here, because you have to be prepared for these situations. This would have been the higher low if it held that support. So if you had asked me about this chart, a couple of weeks ago, and it was before this break, I would have told you, if it holds the support, you got something. If it breaks the support, you're going to have problems, okay? It broke the support. This is what you have to watch out for all of these other coins that are challenging their supports. Theoretically, if this is going to remain strong, that support should not have been broken. So that's a problem, okay, as far as like bullish outlook goes. So since that support has been broken, you have lower highs, and it looks like you have another lower high in place right now, right, established right here. You see that? Draw a little line there. So you have another lower high right here, and theoretically, it's going to go for the lower low. I mean, structurally, that's what it should do. Now, you are at some kind of historical support levels here, right? You do have support levels. Look at this back here. And price is trying to gyrate, but because you're going against the structure, while it is an attractive area for swing trade longs, your probability is not on your side, okay? Because these lower highs this is the most recent price action, the momentum, that's what's in play. So the level may turn it around, but the price action needs to prove it. And there's nothing there right now. All right, so if you're interested in a long, okay, you're at a level that makes sense. Wait for this thing to change the structure. Either you establish the higher low, or even better, you wait for this thing to start taking out resistance levels before you do anything with it. Because at this time, this thing is more likely to push supports. Because in a bearish structure, supports are broken and resistances hold, right? Typically, until it proves otherwise, it's within reason to expect it to continue, right? The trend, or this momentum or whatever. And since the broader structure is not on your side, right? Like this is not like a Solana or a Bitcoin or Ethereum where the broader structures are still bullish. This never had a bullish broader structure. So you have to keep that in mind, right? That means that what that tells me is money is generally not coming into this thing. So it's not a good choice for, especially for longer term, unless maybe it reaches some ridiculously low prices and maybe you believe in the project or something. But otherwise, I don't know. There's not much to do with this. And I don't really, is this really, how much is this thing? All right. Something like this can be for a decent swing trade, but not usually. This one's not on my radar. I like things that have more potential to move. Anyway, and what I mean by that is like from like an average true range perspective. All right, so thanks for asking. Okay, hey Mike, can you give your thoughts on GYEN and why a stablecoin would do? Okay, so is GYEN, is that a coin of some kind? I guess it is because it says USD. So let's think, what is this on Coinbase? All right, this is just pure hype. You want to know? So you want to know why it has done what it's done? That's hype. Either there's a chat room somewhere, some big mouth clown on YouTube said something. Maybe Coinbase had some kind of news reporter. I don't know, but there's no price history to work with here. I don't know what the deal is with this. So again, markets are highly random. This thing may have come out with some very high expectations and then something changed. I really don't have an answer because I have no idea, what the story is with it. So again, I'm trying to look for, there's nothing on a chart that can help us with something like that, right? That's when I see, my first thought when I see something like that is it's just pure hype. Okay, it's just nonsense, which is the case for most of these. Like I said before, these coins, treat them like penny stocks. Penny stocks are penny stocks for a reason, right? No one makes money. You don't see these big famous investors. Well, I put in a lot of money in penny stocks back 100 years ago when I was a young man, and now I'm a billionaire. You never hear that story, do you? Okay, penny stocks are like lottery tickets. People gamble with them. So treat these things the same way. All right. So let's see, Mr. Banian, Cardano, sure. Let's take a look. All right. I like looking at Cardano because it's such a nonsense hype coin. And I've seen so much hype on this thing and so much enthusiasm and optimism and all these great things. And it's in the toilet. Okay, so let's see. This is the weekly chart of Cardano. Now, I warned people about breaking that $2 support and the 190 support. We talked about that, right, in previous streams. Because people ask me about Cardano all the time. This thing is now fooling around 130. So we talked about this on Monday. You are in an attractive area, but this thing can go to $1, right? Or what is this price here? These lows over here, $1, yeah, $1. So it's possible. And right now, the way the structure is, the way the structure is, it can go there, right? You have the lower highs in place. It's following Bitcoin, obviously. The price patterns look very similar. You have a lower high. It's likely to make that lower low. So like some of these other coins, it is in an attractive area for longs because, of course, you want to buy near supports. So these aren't highs, right? You have that argument on your side, but the structure is against you. So this calls for a lot of waiting if you want to be conservative about it. If you're looking to invest, like I said with Bitcoin, it's the same deal, right? You buy your small batches, this thing goes lower and lower and lower, you average into it. You have to be very careful with these altcoins because many of them, these are not investment grade. When you play the dollar cost averaging game, which is basically inventory, it's usually a good idea to do that with high grade instruments, right? Like a good quality stock, a first tier coin, even coins, first tier coins like Bitcoin, they're highly speculative, right? These things like Cardano, I don't care how great they say they are. I don't care how great their project is and all that other nonsense. It's a garbage coin, okay? And it's full of hype. So I wouldn't recommend, I would not highly recommend playing the inventory game with something like this. You know, pick Ethereum. It's much better. The chart's much better too. So anyway, yeah. So I would not do anything with this as far as swing trade or investment, really, until it starts pushing that low, if it can get there. If it can prove itself with a double bottom, okay, you can have a swing trade possibly on your hands. If you get a reversal candle, I mean, you're in the location for one. If you get the reversal candle, you can measure your risk, and that would be an aggressive long. Why? Why is it aggressive? Because you haven't taken out any resistances yet. When this thing starts taking out resistances, that will let us know, that will signal that there's a change in structure. Most likely, if Cardano's doing it, most of the other junk coins in the junk coin space will be doing it too, because they all follow each other. These things don't really trade on their own, okay? Only temporarily do they do that. All right, so I hope that answers your question. Montessor, from I think he's from France, right? What do you think about, okay, let's take a look. USDT. All right, let's take a look at a weekly chart. First thing I want to see. Now, coin like this, I've seen a few, look at this thing. So this is typical of a hype coin, right? Because look how one time it was out of control, and now it's nowhere near that high. It tried to make a higher high, but you see that pin bar that I just pointed to, this pin bar here, that's a failed high. All right, it barely went higher than that previous high. It's a failed high. It's nowhere near its higher high, and Bitcoin is coming off of its all-time highs. So this thing is relatively weak, which is a big red flag for me, you know, as far as long term. As far as short term, you have a lower high in place right now. You're at a possible support, but like many of these other coins, there's no reason to buy this thing yet. You are at support levels, all right? There is a minor support here, right there. That's a minor support. You have another support right around, well, in the same area, basically. So you're probing support areas, but there's no candles that are cooperating with you. Now this structure, compared to some of these other ones, like compared to Cake and compared to some of those other ones that we looked at, this structure, at least recently, has somewhat more of a bullish structure, right? Higher lows, and it tried to make that higher high. Now, I just criticized this high on the weekly chart as a failed high, but that's a longer term view. So short term, it doesn't mean that there won't be any swing trade opportunities, right? So you want to find supports. You're at a support. At this point, if you want to take an aggressive swing trade, you need to wait for some sort of reversal candle to occur here. There's nothing there. Either a bullish pin bar comes into play, maybe you get a bullish candle close, something, and it tries to go higher. But keep in mind, this is aggressive because you have that lower high that you have to contend with now. Lower highs often lead to lower lows. So the more conservative thing to do would be to wait for price to break this. Now, of course, I know you're probably going to want to be in it when price breaks that, but you have to take a lot of risk because price is less likely to do that. That's why it's usually better to just wait, let the market prove itself. You're not going to get the best price, but at least the structure is on your side, and that helps out a lot. So I hope that answers your question. Okay. Okay, no problem. They have the same trading view charts. Oh, cool. Okay. They have the same with some, okay. So Travel mentioned, oh, Travel, I guess if you shared a link or something, I can't see it. So I don't know, maybe you have to change the way you put the link or something. Maybe YouTube erased it. I can't see it. Let me see. Let me just go back here. Yeah, Travel, I think you're going to have to put that again, or maybe change the way you type it because it's being automatically erased. It never even popped up on my feed here. Okay, so anyway, so yeah, maybe you could repeat that. Hey, Peter, would you mind checking gold? Sure. Let's take a look. XAU, USD. Now, gold, is obviously going to be affected by the dollar, right? We looked at that dollar chart earlier, and the dollar is strong. It's in a bullish trend. Gold is likely to act in an adverse way to that. Now, like I said before, when I compared gold, gold is in a broad consolidation. So within this consolidation, gold is basically fooling around in the middle of the range. That's our range high, and this is like, we have a couple of range lows. We have like two range lows here, right? Those are your levels on gold. So in this area right here, this is a very tough spot, a very tough area to be doing anything with gold because it's so random here. I mean, look at this resistance here, right? This was a resistance for a while. It broke above it and then it broke back below it. That level was just completely meaningless, right? When it got retested a couple of times. That's random. So here we are in this midpoint area here. Not much to do here with gold, right? I know people like to have opinions with gold, and gold's going to go to 5,000, and you know, there's no gold in Fort Knox, and you know, I always say the same jokes with gold. I have to come up with some new jokes. But anyway, I wouldn't do anything with gold here. You have bearish, you have this bearish outside bar, right? Look at this. Let's just look at the candlesticks here, right? Bearish pin bar. It's not an outside bar. Bearish pin bar, followed by a sell signal in gold. Shouldn't be too surprising when we see the dollar doing what it's doing, right? So as far as, you know, if you want to take an aggressive swing trade long, okay, I'm not a big fan of shorting gold, but you can make some decent money if you can get it from the right price. The problem is you're shorting it in the middle of the range if you short this here, okay? Same with if you buy it. You would be buying it in the middle of the range, and it can go either way. So you're better off waiting for an extreme level on gold, right? A minor level would be 1761, but the more extreme level that probably the whole world will be looking at are like these lows here. What is this, the 1720s? What is that? 1723, right? Those would be extreme levels. That's your range low for gold, around there. Maybe even 1700, around there, okay? Followed by some type of reversal activity. That's how I would treat gold. Again, the dollar and the bonds will be your clues for this thing. I've been talking, when gold was pushing these highs, right, and gold was going crazy, you had all the gold experts coming out saying that gold was going to 5,000 and all other nonsense. Okay, no, it's back. All right, anyway, so like I was saying, with gold, hold on here, with gold, you don't want to get opinionated. You don't want to get caught up in these things, especially in these random areas. But I was saying before I lost my train of thought, up in this area here, I looked at the dollar, and the dollar was still making highs. And gold and the dollar typically won't be making highs together for long. And if the dollar is the stronger one, which it is, and the dollar is also the bigger market, gold is not going to go anywhere. Right, and that's why I was not interested in gold longs at all. And everyone again, now's the time to buy gold. Blah 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 blah. Yeah, look at the dollar. Okay, so knowing these things, knowing these intermarket relationships, and knowing which, you know, when you have these unusual situations, it's just a good idea to, if you're unsure, you're like, wow, I know the dollar and gold should not be moving together at the same time. That's confusing. But instead of trying to look as to why, well, why? Well, it doesn't matter why. They shouldn't be moving together. So usually the best thing to do in that situation, if you're unsure, is nothing. Don't do anything, because let the market go back to normal, which it will. All right, when things start to make at least somewhat more sense in terms of market relationships. All right. So let me move along here. Thanks for asking. Okay. So that was gold. All right. Hey, Michelle. Buongiorno. No one asks about SHIB. Okay. Kim, do you want to see SHIB? Yeah. SHIB got unpopular, I guess. I mean, SHIB isn't, like, I would think that SHIB would be going to zero by now. But because I remember the hype on this one was ridiculous. This was one of those meme coins that, you know the story. Anyway, as far as technical analysis goes, there's been nothing to do. But one thing I want to point out with something like SHIB is look at this move right here, okay? Most likely there was some hype somewhere, right? Some chat room somewhere, whatever. Got people excited, as you can see, and it failed, okay? This is why you have to be very careful with these false breakouts and not get all excited and think you're going to miss out and blah, blah, blah. If you're not in from a decent price, you know, which this would have been a tough area to buy, but if you're not in from there, you're taking a lot of risk. And look, right, at this point you should be stopped out if you had taken such a trade. But you know what people do? They don't take the stop out. They'll be like, well, it'll come back. It'll come back. At this time, that's a lower high, and theoretically it should go for the lower low. And obviously, as money continues to come out of this thing, and if Bitcoin goes lower, the risk is very high here. This thing can really get hammered. And people don't realize that, right? They just hope, because hope is easy to do. You just sit there and hope. All right, anyway, that's shit. But it's funny no one asking about it. Structurally, it's not a bad structure, right? But the reason why I just don't like this coin is because it's pure nonsense. There's no fundamental value at all. It's just a complete junk coin. This is probably the epitome of junk coins. So you want to play this game with swing trades, or you want to play the $100 game where you throw $100 in and hope for the best. That's really the only way to play these things. Trying to judge them with technical analysis is not going to be very relevant because there's really no substance to these things, right? You know, what gives technical analysis relevance is when you have a large and active crowd, particularly an institutional crowd that is involved in the market, right? So that's why technical analysis lends itself very well to markets like the euro, okay? Markets like the S&P, markets like, you know, Apple, and things like that. Those are institutional, you know, there's a lot of institutional players, a lot of retail players too, but markets, those are markets with substantial volume and large players. So the movements that they make are more orderly, I should say. Even though markets are highly random, they have a tendency to be more orderly, right? Because funds have certain agendas, and you know, people do certain things, and certain news comes out, and these things are just complete, you know, there is no structure around these things. There's no hedge funds or fund managers or banks or whatever buying into this junk coin. All right, anyway, just a point I wanted to point out. Thanks for asking about SHIB. I just talked about it, and probably no one wants to hear about it anyway. All right, Wedge. Smyrna. He's trying to help me pronounce it. New Smyrna. New Smyrna. That's how I pronounce it? Okay, thank you. I'm from Jersey. What do you expect? Okay. Oh, by the way, people that want to put I always forget to do this. Whatever country or city you're from, if you want to share it in the chat, that's always cool. I'm broadcasting from northern New Jersey, the greater New York City area. Again, it's cold here. All right. Kai. Hey, Kai. Bear. Oh, that's okay, Kai. You get these I remember someone asked me one time about this coin, right? I'm not going to repeat the name of the coin, but and it was like one of those situations where like a teacher, you know, like you trick the teacher into doing something that's funny, and the teacher doesn't realize. Is that the right symbol? Hold on. I'm gonna see. Let's see this. That's hilarious. Oh, short. That's interesting. I mean, all right, that's what they want to call it. Look at this. What is this thing? It looks like, here's a weekly chart of it. This looks like, it reminds me of like the UVXY or something. Oh man, what is this? I don't know. But whoever's been buying into that, certainly, is that something that you buy? It's the short. Okay. Oh, so I guess it is like the UVXY, right? Similar idea. It's a leveraged bear token of index covering. That's hilarious. That's interesting. So I guess when the market really starts to get hammered, this would probably be a good thing to buy. right? That's something to keep in mind, everyone. I never would have found something like that. Thank you, Kai, for sharing that with us. So it's not even a joke. All right, let's take a look. IoT XUSDT. Let's take a look. All right, so here's the bigger picture. So a lot of these coins have come off their highs, right? And that's cool. We want to see that. This thing, I remember someone had asked about this not too long ago. Man, boy, has this thing come off of its high. So you have here, it's fooling around in an area of support, right? Like many of these coins we saw. You have this area right here. Price is trying, as you can see, it's trying, right? Something like this would call for an aggressive long. It's aggressive because you have yet to take out any resistance levels. That's your resistance all the way up there. So if you're interested in a swing trade and you want to go for the aggressive long, you can measure your risk. Look at this nice pin bar here, right? It's just above that pin bar. So this signal went off not too long ago. Let's see, what's the high here? 1235 is the high, and this thing right now is at 1231. So it's basically around that buy price. Your risk would have to be defined by this pin bar low, which is 1217. So you'd have to give it a little bit more room than that, maybe 12 even, like 12 cents even or something like that. But the thing is, it's aggressive because you're buying into a bearish structure, right? Like same problem with those other coins. This structure is still lower highs and lower lows. If Bitcoin breaks lower, which it's trying to do, this probably won't go very far. You have to keep that in mind as well. So that would be the aggressive scenario. The more conservative scenario, like I described earlier with other coins, is let this thing produce a high or low. Let this thing produce a double bottom, right? And let it produce that in this area right here, like in this entire area. It may take a week, right? With like a lot of these coins. If Bitcoin can establish the double bottom or the high or low, or Ethereum can establish that range low, then you'll probably see similar patterns in these coins. So if this is the coin you're interested in, keep an eye on that. Otherwise, the risk right now, although I like lows, the structure, the probability of the thing continuing your way is lower, right? Because this is not a bullish structure right now, right? The overall structure is bullish, but this corrective move at this time can continue because there's nothing here that's proving otherwise yet. Okay, so just something to keep in mind. It takes a lot of patience to wait for that high or low or the double bottom, but it will, at least by waiting for it, you will avoid a lot of potential stop outs, a lot of fake outs, like just like that thing I showed you on SHIB, that little fake out move that probably sucked in a lot of people and then it fails, right? This thing has, all these coins have the potential to do just that. People all buy in thinking, oh, just buy the pullback. It's worked before. I mean, even this coin. I mean, look at this. Look at this retracement right here. I'm sure that sucked in a lot of people thinking, oh, yeah, I got the pullback. It's going to new highs. Well, hasn't gotten to new highs yet. So just something to keep in mind there. All right. So I hope you found that helpful. Thank you for asking. That's IOTX. Okay, Alex, hey, good to see you from Romania. Oh, maybe you know Schwartz. Thanks for your, no problem. I haven't commented in a while. Oh, cool, I appreciate that, Alex. I didn't realize you were from Romania too. I'm very popular. I need to learn some Romanian words so I could speak to you. I could speak to my Romanians because they certainly don't appreciate me in New Jersey, but in Romania, I think I'm appreciated there. So anyway, thanks, Alex. Okay, no, travel, I still don't see it. You're going to have to like put that in some other way because YouTube is erasing it. It's not even showing up. So try again. Okay, Monte said, no problem. Elizabeth, who wants to bet? Talking about? No, I'm not talking about that. I don't even know who that person is. I was talking about. I don't want to. The reason I don't mention any names is because I don't need people giving me a hard time. You know, because these aren't small guys. These are like bigger, YouTube people, and I don't need them giving me a hard time. Okay, hey Kai, you probably know that there is a nice short-long position tool in TradingView giving you the percent risk and reward. Symbol above the arrow one on the sidebar to the left. Okay, I'm not sure what you mean by that, Kai. Are you talking about the Bitcoin long-short? I know there's a Bitcoin long-short chart, Is that what you're talking about? Like I have the Bitcoin long short thing on here. Let me find it. Where is it? Bitcoin. I know I have it on here somewhere. Let me see. I used to have it at least. I don't know where it is now. I used to have a Bitcoin long short on here. I don't see it. XRP, Ethereum. No, it's not there. All right, is that what you're talking about? Anyway, maybe you could be more specific. All right, let's see here what else I got. I love when you say buongiorno. Oh, you like that? It's my Italian accent. I am supposed to be part Italian, although I don't speak any Italian. But buongiorno, I try to know some some international words. I can speak some Chinese too, but you don't want to know the words that I know. They're bad. YouTube will ban me if I say them. Okay, XX. So how would you trade with a bigger account? Let's say $1 or $2 million. Would you still swing trade or day trade? Well, that's a good question, Dan. With a large account like that, let's just like $1 million account. For one, what I would do is I would split it up into allocations, right? So a portion of it, each allocation would be for a different purpose. So, probably the largest portion, let's say you split it up in half, right? So $1 million, you split it up, 500,000 would go for long-term position type trades, inventory, right? That's a larger amount. It's nice to have some money to work with there, right? So that would be half the account. And then maybe you take another portion of the account, right? So now you have another 500,000 for something else. You split that in half. So 250,000, that's, or something like that for swing trades, that's plenty. Okay, and now you have another 250,000 that's not used for anything just yet. Maybe you split that in half. Okay, and like 125,000 for day trades, and maybe 125,000 for something else, maybe something more aggressive as well, right? So as I'm splitting them up and into smaller and smaller increments, they can go toward more and more aggressive operations, right? So that's how I would do something like that, because you're not going to sit there and day trade with $1 million account, okay, or swing trade. There's no need to. You can, there's so many, there are many better uses for that money, especially since the losing rate is so high. On you're not going to sit there with a leveraged $500,000 position and be losing $10,000 or $20,000 or $30,000 in a day. It's ridiculous, right? But I'd rather be putting that money into high quality stocks that pay dividends. Also, I would take a portion of that money and put it into treasuries, right, and just collect fixed income for doing nothing, right? I mean, that's stuff like that. That's how rich people make money. Anyway, thanks. That's a good question. Okay, Wedge. Okay. Oh, thank you. See, I can read. All right, Peter. I like if you use the word useless. With You know why, Peter? Because there's so much useless stuff. I've been in this business a long time, and most of the stuff I come across is useless. That's why I emphasize that so much, because most of it is. People don't realize, retail traders, the reason why this group, okay, and I'm part of the retail trader group, I'm not an institutional trader, the reason why this group loses most of their money or all of their money most of the time is because we have absolutely no advantage. Meanwhile, we're given all these tools, all these charting platforms, all these generous fake gurus on TikTok and on YouTube and on Twitter, giving us all this generous information and strategies for free. And meanwhile, no one makes any money, right? So that just proves one thing, right? No one makes money consistently. That proves that markets are highly random, okay? And we have no statistical advantage. So people sitting there, oh, I got my RSI, I got my stochastic, and I got my 200 period MA, and I got my Bollinger Band. It's all useless. Anyway, all right, don't get me started on that rant. You guys like to get me into these rants. I could do that all day. Okay, hey Kai, leverage tokens suffer from leverage ETF. Right. So that's, I mean, as soon as I saw that chart, Kai, as soon as I saw it, I'm thinking it looks just like the UVXY because it's the same deal. Okay, so thanks for sharing that. That's good to know. I mean, that might be a good speculative place to put money if there's if you know these things really go out of season and Bitcoin really gets hammered. Like, you know, you see Bitcoin at like 20K or something. That would probably be a good way to bet on something like that. Okay, but again, of course, something like UVXY and all, they're extremely speculative. We tried some options. I tried some options with them earlier in the year. Didn't work out very well, even though the market went my way, because I couldn't get, there were long options and I couldn't get beyond the rate of decay. So that was a waste. Anyway, thanks for mentioning. Zelta, hey, from Latvia. Hey, haven't seen you in a while. Thanks for stopping by. Can you look at IMMR? Sure. IMMR. Let's take a look. What is that? Is that a coin? I'm guessing it's a stock. All right. So let's take a look here. How much is this thing? All right, $5, about $5.50. First thing I want to look at is the weekly chart, because the daily chart looks unattractive. Right? I'll put it nicely. Unattractive. So here's the bigger picture on IMMR. This is not a good looking chart. Okay. There's no broader bullish trend here. This, if anything, this is one gigantic range. And look, your range high is all the way up here. Okay, look how far that dates back. That's like 2 years. And your range low is basically here, right? That's your range low. That's one of them. That's your extreme range low. And you have this one over here where price is fooling around right now. Okay, it's fooling around near that range low right now. So here's the thing. You have a lot of bearish momentum in this thing, okay? And nothing, all I see are lower highs and lower lows and bearish patterns. That's all I see. So that's important for your perspective going forward when it comes to buying lows. Now look, I'm all about buying lows, right? I'd rather buy a low than buy a high. But here's the thing. When you're fighting something that's generally bearish, which is what this is, then lows have a greater tendency to break. That's the problem. So right now, I wouldn't do anything with this. Okay, you are at a good location for a long, but in this situation like this, I think it pays to let the structure at least attempt to change, if anything. But the broader structure is not even supportive. We've looked at many charts, like, you know, the Bitcoin chart, the Ethereum chart, the Solana chart, some of these other good-looking charts. They have broader bullish structures. This does not. So even if this structure changes, you may have a temporary move higher. I can see here, you get these temporary spikes that probably suck in a lot of people, and people get stuck in that. So, you know, if you want to wait for at least a change in structure, maybe you have something, but there's just nothing here. Okay, I wouldn't go for the double bottom. It's not even worth the aggressive double bottom because the structure is working against you. Right, so perhaps wait for a change in structure, or basically, other than that, you're gambling with this thing, right? You're looking for one of these spikes, which means you just have to start buying it at really low prices and then hope one day it spikes, right? A chart's not going to really help you too much with that. These price spikes are not something a chart can tell you is coming. Most likely, that's news of some kind, okay? That comes out of nowhere. You know, they announce, oh, we're doing some kind of special blah, 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 and you get a price spike. And all the insiders and all the people that knew about it, they dump it on you, right? That's what goes on there. So I don't have much to say about this besides that. All right, so thank you for mentioning this. All right, so I want you to learn the contrast. I want you to see the contrast here, right? A chart that looks like this versus a good-looking chart. A chart like, you know, Solana or Ethereum or something like that, that has a clear series of higher lows and higher highs, at least recently. This, not even recently. Okay, so thanks for asking. Okay, travel. Investing. Oh, there you go. Okay, that worked. Yeah, I mean, see, YouTube, I don't know. They certain things are okay, but you can't put something like that. Meanwhile, travel, you can have a guy come out on YouTube and give you absolutely no value and ask you for money, and people give them the money. All right, but you can't put a URL, or maybe that's a setting that I have on the channel here. I don't know. I don't check the settings. All right, so thank you. Investing.com. So yeah, the guy, Mr. Banian, asked about that earlier. Check out investing.com. It's a free site that you can perhaps try to use it for correlations or comparing two markets together. I would think that the free version of TradingView can do that, but it's probably limited. All right, anyway. Okay, let's see. What about, okay, let's take a look. Anything that mentions that, I mean, I saw a lot of hype. Okay, look, that's a good-looking chart. Okay, that's a good-looking chart. Clearly, higher lows and higher highs. I mean, but look at this. That's the weekly, right? When they go vertical like that, you know, you have to be suspect. But we're not at the highs anymore, all right? Now, the thing is, now that I didn't know that this is one of those, anything that's involved in that hype machine that I'm going to call it. All right, opinions aside, no opinions here. Let's just talk about the price chart because I don't want to get into that Facebook stuff. Anyway, you have a higher low developing here. It's a good-looking chart, okay? Possible higher low at a potential support level. So you have all that going for you here, okay? As far as swing trades go, yeah, this is something that if you didn't tell me what symbol this was and I had no idea what they would do, then I would say, yeah, this is a good-looking chart for a swing trade long. Now, again, Bitcoin's going to have to hold up too, because if Bitcoin breaks, many of these are probably going to follow. But look at the recent price action. You have a bullish pin bar over here coming off of that support. It hasn't given you the buy signal yet. Today's candle isn't that good, but the thing is, you haven't taken out the low either, right? You haven't taken out that low either. So this can turn into a buy signal still, right? And it's much more stable than Bitcoin. Like if Bitcoin is doing something like this, I'd be like, oh yeah, that looks like it's going to be a long soon, right? But Bitcoin's not doing this, not yet. Anyway, so this is a good-looking chart. You could get a buy signal from here. If you get the buy signal, you could measure your risk from this low, which is $4.76 around there. Maybe round that to like $4.50 or something. And then you would have that next leg would have to take you to the high. If you can't justify your risk, right? You need to be able to justify your risk. So if you're buying this thing at, let's say, what is the price? $5.70. So about $1. You need to justify the risk at $1. So people will say, well, where do I put my price targets? As soon as that thing goes $1 in your favor or greater than 1-to-1 reward risk, that's when you should start considering taking something off the table, right? Typical targets 1-to-1, 1.5-to-1, 2-to-1. It's a good idea to think of your profit targets in terms of risk, relative to risk, not price levels really. I mean, you can use price levels and support and resistance as well. I use them a lot, but I think it's more effective to just think of it in terms of risk. You know, where am I in terms of reward risk? Am I at 1.5-to-1? Great, I should take something off the table. It's a good habit to be in. Common mistake is people I'm just going to let it ride. I'm going to make 10-to-1. And they're up like 2-to-1 and they give it all back, right? Because the market is not going to go that far anyway. You don't know how far the market's going to go. There's no way to predetermine how far it's going to go. So you need to look at it in terms of what you risked and where you are relative to that risk. That's the swing trade mentality. All right, so thanks for asking. Now so I have some time. Let's take a look at Mana. I didn't know it was part of that thing there from Facebook. So it's the same situation, right? In fact, it looks a little more similar to Bitcoin with this ugly candle today. You have the higher low area. It's trying to develop. So you could get a swing trade long from this area. Now keep in mind, if Bitcoin breaks and these things start breaking their supports, which is possible, it's always a possibility, then you want to step away from these, right? Don't go crazy with these because, you know, these things are full of hype to begin with. They're very full of hype and a lot of optimism and all that nonsense and all that garbage, right? You know what I'm talking about. So they can break. And if they start breaking these supports, like if this thing breaks this level right here, what is that? $3.22. And all these other coins that we looked at that are basically flirting with supports, if they clear the supports, you have another extreme support here at $2.50. If they clear those, right? Then you want to step away from them because that's not something they should do if these markets are going to stay strong. Does that make sense? The chart structure will tell us. Right now, these structures are still bullish. If they change, that's when you want to step aside. Like some of those charts we looked at, like IMMR, that's a bearish structure generally. That's not something that you really should be too enthusiastic about getting into. If these charts start turning into that, then that's really when you should just step away and let them stabilize. It may take a few months or something like that, okay? If they go out of style or out of season. We saw that a couple of years ago the first time, right? When Bitcoin pulled back to 3,000 or whatever it was, a lot of these altcoins were in the garbage zone for a long time. And that's a common cycle. So just something to keep in mind. The warning flag will be when they start breaking their supports. A lot of people are going to keep buying into that, not realizing that there's no money coming into these things, okay, at that point. But that hasn't happened yet. So we can't make that prediction. It's a question of if the market gives us that look or not, okay? So thanks for asking. Okay. All right, yeah, so Travel, I answered the question. All right, Kai. I meant the tool in TradingView helping to define. Yeah, you're talking about the trade tool, right? There's the trade. In fact, I think it's this tool right here, the trade tool on TradingView, where you can actually put the prices, and it gives you. It's a nice little tool. I've played with it. Yeah, TradingView is a good platform. Can you teach us how to day trade? No, I can't teach you how to day trade. Thanks for asking, though. I don't know any treasuries in Romania for paying fixed income so far. Okay. Yeah. For fixed income, bonds. We have bonds here. We have treasuries in this country. They don't pay. The interest rate's always changing. That's why you look at the bond market. So you look at the interest rates or the yields, like they call them. But that's risk-free money, right? You put money in there, and as long as the government doesn't go out of business, you're going to get your principal back plus interest, right? So, and you know how we are here in this country. All we do is print money. We love printing money. So I don't think we're going to go out of business as long as we keep printing money. Free version of TradingView can do, correlations. Okay, investing features are more basic. Okay, thanks for sharing. Please look at ORCL. Sure. Okay. Oh, thanks, Kai, for mentioning that. Yeah, there's so many like hidden tools or tools that are not really commonly used on TradingView. It's a really amazing platform if you think about it. And I'm not pushing anyone to my affiliate link. I don't even have my affiliate link set up here. So Oracle. No, this is a good looking chart. Look at this. Higher lows, higher highs generally. Recent structure, corrective move. Now Oracle, this is an old stock. I remember this back in the day. I remember this stock. And this is a market stock, okay? Meaning it's going to be a reflection of the general market. Look at this thing. Look at this thing. That's a weekly chart of Oracle, okay? So here's the thing. This is definitely not a garbage company or like a garbage coin or a penny stock. This is a quality stock. I don't know if they pay dividends. They might. I'm not familiar. So here's the thing. As far as something like this goes, if you're looking to invest in this, I mean, you're at good prices, right? You're at a pullback here, right? You're not buying the highs. That's good. You have a resistance, an old resistance there. This area is likely to act as a new support. As you can see, it's trying, but it's having a hard time. You have a lower high established right now. Now, here's the thing with something like this. So you can play the dollar cost averaging game with something like Oracle. How much? $88. Now, again, sizing is the key here. When you're looking at something like this, it's very important to keep an eye on something like the NASDAQ, because the NASDAQ is going to be a reflection of the entire market. Here's the NASDAQ 100, right? NASDAQ, look at this close today, minus 235 points. This is a head and shoulders. You see it on the NASDAQ? Off of a predetermined resistance level. So most likely, this market is likely at a cycle high. Okay, so something like Oracle, that's an important factor, because while Oracle is at an interesting level, you're going against the highs of the broader market. This thing follows the broader market. So the broader market has a lot of potential to pull back, which means this support is not going to be very reliable. If the NASDAQ pulls back, this thing can, easily break these supports and find its next support, around this level, right around in here. Right where that gap is. You see that? See the gap? Right in this area here. You see that? So depends on how you want to play this. If you're playing inventory, then again, it's just about sizing. It'd probably be a good idea to size smaller up at such a region because of the NASDAQ vulnerability, right? The NASDAQ risk, we can call it. And as it starts pushing lower prices, you accumulate, you can skew slightly larger until you reach your allocation. And that's how you play something like this. Keep in mind, what protects you with inventory is your small size, because if there's an unexpected move, like the NASDAQ gives back 50%, which again is not likely, but you have to be open to these things. Something like this can give back a very large amount. But how can it be? It's Oracle. Markets are irrational. So that's how you protect yourself. You don't go in there, you have $10,000 to invest and you're throwing in 5,000 at a time. That's a bad idea, right? But if you're throwing in 200, 300 at a time, maybe 500 at a time, now you're protecting yourself as this thing is going lower and lower, right? And if there's some kind of extreme move, you still have some more money to allocate to it, right? Does that make sense? So, but generally, that's a good looking chart. You just have to keep in mind, like the NASDAQ and S&P, if they go into a corrective mode, we have not seen a corrective mode in the broader market in years, okay? Thanks to all the money printing and all the nonsense that goes on in this country. Since the market bottom of 2016, if you think of it that way, this market's been pretty much vertical, pretty much, right? And then we had all the quantitative easing, whatever you want to call it, money printing at the bottom of 2020, okay, the March 2020, where they started pumping the inflationary blah, 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 right? And that's what took us to where we are now. So if that starts coming out, which it looks like, bonds are starting to price that in, these things are they're going to be spending some time in a corrective environment, right? And like someone was asking earlier, what would you do in a recession and blah, blah, blah. If we go into something like that, you're going to see these things, they have nice structures right now, but those structures are going to start to change, right? So look at this chart. So you want to be prepared for something like that. You're still buying near highs when you look at the weekly chart. You still buy. Look at the 2020 March low. Look at this thing, and look where we are now. So that's why it's important to know what type of trade. Is it a swing trade? Swing trades make sense here because they're short-term oriented. But position trades, you should probably skew smaller, because look at the halfway point. The halfway point on this thing is like here, okay, and it can go there. If we have some problems, right, it can go there. So that's where you have to have that perspective and understand, translate that into risk, okay? Because things look good until something changes, and now they're breaking supports, and you're like, oh, how could I have known, and blah, blah, blah. The location is still generally risky. Use the stock market, like the NASDAQ, as your gauge. And the NASDAQ is certainly not at investable levels, in my opinion. I've been criticizing the NASDAQ levels since June and July. Like, no way I'm going near this stupid thing. And it's gone about 2,000 points higher, but I like lows. For when it comes to something like that, we should be at better prices, wholesale prices. We're not even close, right? So Oracle would fit into that. So thanks for asking. I know that was a really long analysis there, but I hope you find that helpful. Okay, need to change the country. Cannabis, can't rely on the Romanian government. Yeah, I don't know much about the country of Romania, but I don't know. It looks like in this country we're not much better. So anyway, all right. Let me not get political here. So can you recommend where to learn how to day trade for that 25% of the large account? No, because here's the thing. There's a lot of I spend time looking at day trader websites and day trader gurus, and I like to see what they're doing, because that's my background is as a day trader, okay, and I'm very in tune with day trading futures and stuff like that, not stocks, but more on the futures side of things. And so I look around and I like to see what's out there in terms of day trading, and there's so much nonsense. And I have not found anyone that I think that, oh yeah, that guy really knows what he's doing. Because anyone that knows what they're doing, they're not going to share it. Okay? The reason why is It has to do with the statistical advantage that you need in order to succeed on that time frame. That's why people keep it a secret, because they can't give it away. If they give it away, then they will lose their advantage, because once everyone starts doing it, the advantage will go away. Okay? Other time frames, it doesn't work that way. That's why I can talk about swing trades. I could talk about position trades, because we're not talking about the type of statistical advantage that you need to day trade. So that's why I can't recommend anyone. There's a lot of fakes out there. They charge a lot of money. They get thousands of dollars for a day trade program, and all they do is basically teach you how to. What they do. They're mostly focused on stocks. Okay, day trade stocks, and the key to stock day trading is stock selection. So you would have to basically have a scanner and find stocks that are on the move that fit some kind of strategy. Like a common one is called gap and go. Stock is gapped up for whatever reason today, and chances are that momentum will follow. And then you're just looking for the bullish trend, right? And you're just basically trying to trend trade that stock. And there's plenty of examples of it on YouTube, but I would not recommend it, because the thing is, the costs are very, very high. And when the markets when they don't trend, all you're going to do is churn. So you're not going to make any money, especially after the costs and taxes and everything else. I would not recommend that at all. Okay. So anyway, thanks for asking. HT perp. Okay. Well, that must be a futures contract. We'll take a look at that. Let me just see what else I have here. Hey, Abraham, good to see you. Adrian, thanks for stopping by. That's why I'm asking. I know, and I don't want to learn from someone they give. Well, yeah, but I can't. I'm not. See, that's why I avoid that. I avoid teaching that, because it's, for one, it takes. If you don't understand the bigger picture stuff, the smaller picture stuff is even harder. It's very difficult. Number one, you have to develop you have to have that personal advantage, and if you don't have it, you can't win. Right? The costs are too high. So, I mean, there's tons of research out there that supports that. The costs make it not possible to day trade. So, all right. Anyway, so let me see what else I got here. All right. So let me ask that HT perp. I'll answer that one, and then I'll wrap this up. Let's take a look here. HT perp. What is that? HT perp. Oh. Okay, I'm not familiar with this. Huobi token. Oh, is this what they have? The exchange has their own futures contract? Is that what that is? That's interesting. All right, I didn't know about that. Let's take a look. Thanks for mentioning. Well, bigger picture, looks like we're consolidating here, right? We have a range low here. We have a range high, basically here, right? And you're coming off that range low with like a nice little higher low situation, right, off of that range low. You have a possible higher low, but you're inside the consolidation. This is not a trend anymore. All right, so here's the thing. Here, let's take a look. So yeah, the middle of the range is right there, right about there. So you're sort of like in the middle of nowhere here. So as far as swing trades go, it's starting to change its structure. The question is, do you want to go for how much you have to risk? The higher low, in theory, should lead to the higher high, but when you're in a consolidation, that doesn't really follow through as much, right? You need this thing to go here, but you're not in a trend. What is the risk? The risk is going to be this pin bar low, which is $7.07, whatever, so you can round that to $7 basically. This thing right now is at 960, what is that? 960, so basically just over 950. So you're looking at basically like a, what is that? $2 or $2.50 worth of risk. That's if you buy it now in this breakout, this attempted breakout. So I think that the risk is kind of high. You need to make at least what, $2 or $2 or $2.50 or $3 to justify that risk, which means it's going to need to take out this high over here. What is that? $10.80. So it needs to do better than that, right? It needs to go higher. So you're taking a lot of risk, I think, as far as a new long goes. It's aggressive. Maybe it goes there, but it's aggressive. So in a situation like this, I would wait for the higher low. I mean, I know I say that a lot, but the higher low at least gives you a better price, possibly if it can produce the higher low, or possible double bottom. As you can see, this level is a meaningful level. It's touched this level a few times. So that's where your highest probability is, at that level. Okay? When you get into a level like this, where you are now, price action tends to be very random. So things can go your way, but you're asking for a lot of trouble, right? Why take all that risk when it's not necessary? So I would wait for the higher low or the double bottom on something like that. See if the market can give it to you. Or another consideration is, if you're going, basically what you're doing here is you're going for the breakout. Take a smaller position, right? That's another way to control your risk as a swing trade. So for example, if you normally buy, one contract or whatever, or you probably can't do a half a contract. So let's say you normally buy 2 contracts, you only buy 1 contract and see if it goes. If it fails, you lose half of what you normally would lose, right? That's why you have to look at it. Always look at controlling your loss and, how do I get my loss to be smaller? Always come from the perspective of loss or risk. And I think that helps you form the right habits and be more defensive, right? And that's the name of the game, is being defensive. That's why, people give me a hard time for being conservative, but I've lost a lot of money, okay? I've been aggressive, and one thing I don't want to do is putting out aggressive calls that I know chances are everyone else is going to lose money, right? So that's why you really being defensive, even during aggressive times, which we've seen recently, it's just a good habit to be in, because that aggressive time is temporary. And when the harder time comes, which it looks like we're starting to get into here, when the hard market comes, you have the right mindset for it. Otherwise, you're going to do what most people do during the hard market, and that's give back any profit that they made during the easy market. They're going to give it all back. All right? They're going to get churned. They're going to get in all these false breakouts. They're going to go into hope mode. They're not going to use stop loss orders. And anything that they spent all that time making over the previous year, they're going to give it back. I know. I've done it. Okay? So it's a mindset that you have to have, and that's why I stick to my rules, and I'm just conservative, and that's it. I basically have narrowed it into I trade rules. And if the market doesn't fit my rules, I don't care what the market does. There's always an opportunity somewhere. And it's just a matter of waiting for it. Okay? And it'll come, as we saw with Bitcoin, right? It will come. So, and that's easy for me to say, and it's easy for you to listen to. But when Bitcoin's pushing 69K, no one wants to hear that. They're like, but it's going to 100K. I'm going to miss out. Right. And we went to 42K. Okay? So anyway, all right. I'm going to wrap this up here in a moment. Let me just see what else I have here. Yeah, it's time for me to wrap this up. Okay, no problem, Wedge. Thanks for spending some time with us today. Okay, no problem. I was thinking of it as a small position because it's probably okay. Well, thanks, Kai. Kai, you bring up some interesting contracts and things that we can all learn from. I mean, I wasn't familiar with some of these things, so always learning something new. Thank you for helping us expand our horizons. Alex, e-gold, when you have time, because I really want to accumulate e-gold. Someone had asked about this. Was it you that asked about e-gold the other day? I remember looking at this chart. All right, I'll take a look at it real quick because, I just like to talk a lot and I can't stop talking. All right, let's see. e-gold, USD. You want to accumulate some. Yeah, so this has got the same general chart is good, but you got the same situation as Bitcoin, right? You have a bearish outside bar right now at the support area. That's a bearish sign, right? This is likely to continue to sell until it proves otherwise. If you want to start accumulating, if you're talking about inventory, take your small bite now, but again, make sure you have a time schedule. Like, the 15th of every month, you're going to take your small bite, no matter what the price. And now, since you're averaging in at lower prices, perhaps you take a larger bite or skew slightly larger. Instead of $100, which is your average purchase, maybe you buy $200 because you're at better prices. You don't have to skew smaller here because you're not at highs. Remember what I was telling everyone a month and a half ago? If you're going to buy inventory here, skew smaller. Go back, watch my videos. It's all there, right? So anyway, this you can skew larger, but just keep in mind, Right now, the momentum is unfavorable. So going back to Bitcoin, you know, look at this Bitcoin chart, right? And I talked about it before too. The sell signal is in play right now. Does it follow through? It's a different story. We have to see what kind of candles we get over the next few days. We cannot sit here and assume that, you know, it's going to go back to 42K. It might, but it also may reverse because it's in a very attractive area for such price action. It's about being prepared, right? It's about knowing what to anticipate before it shows up. And when it shows up, you have your plan and you know what to do. If it doesn't show up, then you have nothing to do. Okay, so that's why the location, understanding the probability of your location is so important. A lot of people that day trade, or you know, they've been doing this for like a year or two and they think they're experts, they don't see this probability of location. It's not something that's obvious. It's not something that's on a chart. You have to understand your levels and what is likely to happen there. And then you leave it up to the market to tell you. And when the market tells you, now you're prepared and you can measure the risk. Once you can do all that, you have a potential trade idea. Whether you want to take the idea or not is a different story. That's going to depend on your risk tolerance and, you know, how risk adverse you are. Okay, so anyway, all right. So that was eGold. I have been aggressive too and came to the exact conclusion. Always defensive. I watched and we're exactly an easy money. Right. So Kai says here, I watched and exactly 5.5 weeks of easy money where aggressiveness paid. Right. But you see, so Kai, everyone gets all mixed up with that 5.5 weeks, and they think that that's a normal market. They don't realize that that's not normal. It can happen, but those are rare times. So if you can take advantage of that time, great. The thing is, you don't know when that time is going to come, and you don't know when that time is going to stop. Right? That's part of the random nature. So what typically happens is everyone gets most aggressive at the highs. Like I said, a month and a half ago, there were billboards in town, billboards telling people to buy Bitcoin. Billboards. All right. There were reports of advertisements in international cities. Buy Bitcoin. Buy people. The YouTube videos were saying we're all going to be millionaires. Right. That's when everyone gets most aggressive at the worst time, the top. So anyway, but you know what I'm talking about. Okay. Okay, no problem. Control my, okay, cool. I appreciate that. All right, so I'm going to wrap this up. Again, I appreciate everyone spending some time with me here today. If you want to know more about Greenbridge and stuff, you can click on the show more. There's links there. We have a chat room and stuff. So I'll leave you with this. Again, don't get caught up with all the noise. If you know, we are all in the retail trader realm. And like I said the other day, know your purpose, because our purpose is to make other people rich, okay? That is why everyone gives us all this great stuff for free and this and that and tools and a million oscillators and blah, 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 right? There is no statistical advantage. They want you to trade because you will lose and they will win. So you need to be defensive, number one. Number two, you need to have a specific set of rules. But before you have the rules, you have to know what type of trade you're going after, right? An investment is not the same as a swing trade. So that needs to be defined first. Otherwise, the rules are pointless if you're not sure what type of trade you're taking. So first know that. It's okay to do it both simultaneously. Well, I'm going to have an investment over here, but I'm going to have a swing trade over here. That's fine, okay? But just have it organized. Have all of that organized. And the other main thing that I want to leave you with is stop consuming what everyone else consumes. So we all like to watch news and this and that because it helps feed our illusion of control, but news does not help us with timing at all. So it doesn't help. Learn to get that information from the price. That's what I do. I don't need to know news. The price tells me what's going on in the world. So that's, learn to focus your attention on information that matters. And that information can come from a chart. I mean, that's what I specialize in. That's price action analysis. That's the way I define it. And by doing that, you are basically letting the market tell you, because we're assuming that all the known information in the world is baked into price. Price is a discounting mechanism. It's one of the basic tenets of technical analysis, and I find it to work very well. So we can rely on price. Now, of course, price is not perfect. there's a high element of random, price action. There's a high element of random nature. I can't even talk anymore. There's a high random nature to markets. So you have to accept that. Okay. And that's where risk control and risk management comes in. That's really the skill. Okay. People think the skill is reading charts and I have 10 monitors and nonsense. Okay. The real skill is risk management, keeping, protecting your capital and recognizing high probabilities. High probabilities are not obvious at all. They're not advertised. You're not going to see a guy on YouTube video, oh, look, you're going to be a millionaire. You get an opportunity if you... Nonsense. Okay? It's not going to be on a billboard. It's usually in places that are not obvious, right? Like right now, Bitcoin's looking ugly. A lot of people are probably thinking this is a short. This could be a high probability opportunity, but I like to let the market prove itself. We are in a location for such an outcome, but the proof isn't there yet. So confirmation needs to happen. All right, does that all make sense? I know I like to keep talking. I'm going to wrap this up. I know some people here, it's like midnight in some of these places. When's this guy going to shut up? I'm going to shut up now. Okay, anyway, so I want to thank you all for taking the time here with me today, listening, asking great questions. I will be streaming again on Monday. If I missed your question for whatever reason, please come back and ask again. Otherwise, wherever you are in the world, please enjoy the rest of your day and the rest of your evening, or the rest of your evening. And thank you very much for watching.